Welcome back in, everybody. So Pfizer is absolutely selling off, nosediving, definitely hit my recent price target of $26 a share. Let's go to it live right now. And we can see here that's trading just below $26 a share right now, down 9%. Management is guiding for basically flat to down revenue in 2024. And when we look at this recent sell-off on Pfizer, this is a company that I definitely thought was cheap in the 30s. But management has really let us down. So I've lost a lot of respect, a lot of trust in management. But with all that being said, I do think the acquisitions of Seagen and recent acquisitions are going to eventually be top line revenue producers over the next 5 to 10 years. Now, over the next 1 to 5 years, obviously there's going to be some problems. I don't think you really need to rush to the stock. But let's talk about what's going on here. So Pfizer warns that 2024 revenue could fall down by soft demand for COVID products. And I read the statement by management, and basically they said that they're projecting anywhere between $58 to $61 billion of revenue, and they're being cautious in their guidance. That's not a huge drop off actually to what they were projecting out before. So to see a 9% fall, I just think this is a washout. I think people are just kind of giving up on the stock. But I think there's tremendous things in their pipeline that are going to cause top line revenue growth from 5 to 10 years out. So if you can kind of deal with the ups and downs of this stock, I think you're going to have a tremendous opportunity to buy it at a reasonable price. And we're going to get into price in 1 minute here. But what I do want to show you is the long-term chart on Pfizer. This was a $17 stock, shot up to $40, came back down to $15, shot back up to $59. And this is all driven onto what is in their pipeline, what's going to create revenue. This was a company that was doing $100 billion of revenue during COVID, and that's why we saw that. And that's when we saw that massive spike of Pfizer getting close to $60 a share, now trading around $26 a share. And so their revenue is going from $100 billion down to roughly $58 to $60 billion of revenue. And that revenue is probably going to stay flat over the next 1 to 3 years. And so when we project that out now, we originally had a $26 price target. But what I'm doing here is I'm going to flatten out their revenue from years 1 through 3 and say that they do 1% revenue growth. From 3 through 6, I'm going to say that there is going to be stuff that comes through their pipeline and actually is productive. And I'm going to give it a 6% growth rate. And then years 4 through 10, and then years 6 through 10, I'm going to give it a 4% growth rate. What does that give us for a stock price here with an 11% compounded rate of return? That gets us a $24 stock price. So let's take a look at where support might be for Pfizer on a long-term chart. So when we go to the longer-term chart, this is a 20-year monthly chart. Now, I think we're going to find support basically between, call it $20.50 to roughly $22.54 is where I think the absolute low is going to come in the stock. Can it go lower than that? Yes. But I think that's where it's going to find the absolute bottom here. And when we look at this chart, the alarming thing is this has been pretty much dead money for 20 years, unless if you're buying it at a good price, selling it and reinvesting the dividends. So you have to kind of be an active investor owning a stock like this and understanding what's in their pipeline and what's going to drive revenue. And so currently, I think what's going to drive revenue is their recent acquisitions. And so is this something I'm going to add in my portfolio right now? So let's take a look. If I'm going to start averaging into Pfizer, I want to get it right around that $24 mark because I've updated their revenue. I don't see a reason to actually rush to this stock. I do think that they could cut their dividend here pretty soon because the financial cost of interest rates on the rise and them closing the acquisition of Seagen, I think is actually going to hurt earnings even more. So the cost of revenue now is going, so the cost of capital has gone up, which is going to impact a lot of their acquisitions and the amount of debt that they're carrying. So I'm not in a rush to jump to this one. I just want to understand what is going on and where fair market is. And so for me, basically, between $22 to $25, I think it gets very interesting. And so how would I build out my position in Pfizer is most likely I would take 1% of my portfolio and start dollar cost averaging in until I build out roughly between a 5 to 7% weighting in my portfolio is where I think I would want to own Pfizer. Now, this is one of the larger pharmaceutical companies. This is one of the more innovative companies. I think buying it at this type of price is a long-term buy and hold for a good position for, I think, a good position in a good company at a good price. So when we go through history here, we can see in 2020 they did $42 billion of revenue, and in 2019 they did $51 billion of revenue. And so when we take a look at what kind of cash flow we can expect from the company with those types of revenue, as I stated before, I do think cost of capital is going to be a little bit of a problem here, but we're probably looking anywhere between $8 to $10 billion of free cash flow that they could generate off of future revenue growth here. So we see here that they do pay a $1.64 dividend, and this is where I think there's going to be a problem paying this dividend long term. We'll keep an eye on that, but $1.64, if the stock's trading right around $26 a share, so $1.64 divided by $26 a share, you're looking at a 6% dividend yield, which to me is a little hefty for them to be paying out when we consider the recent acquisitions, the cost of those acquisitions, and earnings coming down. The payout ratio is going to be extremely high, which I do think is going to be a problem. So once again, that's something you definitely want to monitor here. So we'll be monitoring Pfizer throughout the day. Could be the first stock that I buy before the new year. As I stated before, I wanted to start in 2024 really averaging into positions and building out a portfolio. And so how I would handle Pfizer is basically buying it in blocks of 10 shares at a time, until I build out roughly between a 5 to 7% weighting in my portfolio. So this is one of the few stocks right now that I think is presenting an opportunity that I would be willing to take on some risk with this one. I definitely think 5 to 10 years out, my future self will thank me for buying at these type of levels, but could absolutely be wrong on that as well. And that's the risk you're taking when you're buying individual stocks versus just averaging into a broadly diversified index. So if I'm trying to outperform the market, I need to be picking stocks that present the largest opportunity and take on a little bit more risk. And I think Pfizer is actually kind of in that spot right now. My biggest concern, once again, is if they slash that dividend, we could see the stock sell off even more. But we'll see what happens here. As always, appreciate everybody's time. Thank you so much for spending it with me. We will see you in the next one.